Welcome to the Valuability Podcast, episode 53, How to Sell a Business, Part 2. The Valuability Podcast is for anyone interested in financial planning, business, leadership, and personal development. Whether you are a financial professional, business owner, individual investor, or employee, we believe that financial success comes from creating a plan on the foundation of your values, and building your ability will get you there. My name is Danforth Fleek. I am joined each week by my co-host, friend, and mentor, Philip Simonson. We have been in the financial services industry for 20 and 40 years, respectively, both as financial advisors and in a wide range of roles on the wholesale and retail sides of the business. We are joined again this week by our guest, Mike Anderson, former president of Ameritrade and managing director of Bridgepoint Investment Banking. Mike, welcome back for another week.
Excellent. Thank you so much.
I just want to remind people, if they want to get in touch with Mike, you can reach him via email at manderson@bridgepointib.com, or you can go to their website, of course, bridgepointib.com. Or you can reach him by cell phone, 402-290-6611. And of course, we just want to remind you, if you do reach out to Mike, be sure to let him know that you heard about him on the Valuability Podcast. One last point, I want to remind folks of the fact that we have a presentation out on our website if you want to follow along. If you're out driving or running or something like that, please do not attempt to bring up the presentation, but if you're in a spot where you would like to follow along, you can find that at value-ability.com under the content tab. Click on the link for documents and it will jump you down to the bottom of the page there. Now, Mike, to start out, why don't we go through, we had you on last week. We focused primarily on the role of the financial advisor in the transactions that you do. This week, we're going to focus a little bit more on the actual business owner side of things, but why don't you go back and review the high points of what we discussed last week, and then also remind folks what kind of your sweet spot is. And there are, as you mentioned, folks that do what you do for other size businesses, but for your sweet spot, what is really the best target market for you?
Yep. Appreciate the opportunity to be on the show again. Just quick background for anybody who is looking at the PowerPoint. I'm on slide 3, talking a little bit about Bridgepoint Investment Banking. We do have 4 offices based across the Midwest, Omaha, Des Moines, Lincoln, and Denver, with a satellite in Chicago. But we've been involved in capital raising and merger and acquisition activity for a long time, actually. We've done 120 capital raising projects worth about $85 billion. And the merger and acquisition advisory side, 96 transactions worth $36 billion. So our focus really is working with business owners. We're often introduced by financial advisors, as you guys alluded to in the intro and in our last session. But ultimately, our audience, if you will, our client is that business owner. I think today, just to recap, in case anybody didn't listen to the last session, I do want to be, I'll say, clear about definitions in the industry. So an investment banker, my role is to act as an agent on behalf of that business owner. The value proposition for the business owner is that I sit on the same side of the table as them, and I focus on creating and maximizing the value of that business. The business owners know their business extremely well, but my focus is to know what the market looks like, just as the stock market, where you guys came from, has ups and downs to it. The business market, the value can be created and it can go away. We saw that with COVID just recently. If you were in travel and transportation, you took a significant hit. So there is a real market out there for businesses, and the value can be enhanced by working with specialists. There is a group in the industry that we work very closely with called private equity. and then venture capital. And so again, just to touch on definitions, private equity, their goal is ownership, and their goal is frankly to buy low and sell high. So not different from anybody else. That's how the stock market works too. But these are operating companies. They want to leverage their capital, leverage their knowledge, their connections to grow business with the intent, frankly, of selling in 5 to 7 years. Venture capital, and often those two terms are used synonymously, is very different. Venture capital is focused on funding smaller, more risky ventures, hence the name venture capital, in return for ownership. They generally will focus more on technology, generally, more of a startup situation. I spoke with a gentleman the other day in Oregon the team has invested $4.5 million. They don't have any real revenue. They don't have any real clients, but they're, quote, right at the edge of finishing their business and need another $1.5 million. That's where venture capital would step in, try and help finish the funding. So again, just real quick definitions. Private equity is different from venture capital, is different from investment banking, and I'm an investment banker. So I never invest in a business. I simply represent them and act as their agent.
Now, I've, in my career, not worked too long directly with business owners. I mean, I was a financial advisor for a couple of years, and I saw a couple of the bank that I worked at was primarily a business bank. So some of my individual clients were business owners, but I never really got involved on that side. So as I've gotten more involved on the consulting side of the business, obviously I'm working directly with business owners. And the one thing that I find most interesting about this entire process is that it seems to be almost constant that people are sniffing around for businesses to buy, and business owners are constantly having people approach them and talk to them, but very many of those don't go anywhere. That's the first thing I find very interesting. The secondly is the business owners don't seem to have any idea how really to represent their business. So what are the main things that a business owner really needs to understand about their business when they get into this process?
Sure.
And Mike, can I tack on one thing to that too? Well,
You bet.
I know you're a great storyteller and can give examples here. So if you can also remind our audience, what's your sweet spot when you're describing this scenario?
You bet. So the sweet spot for us are operating companies. Again, to hitchhike off the venture capital, we really don't interact with venture capital because our focus is businesses, as a rule, with EBITDA, earnings before interest, taxes, depreciation, and amortization, of 5 million or more. So as a rough rule, that could be north of 25 million in revenue. We are industry agnostic. There are a few industries that we're just not experienced, and we'll tell people that that's not a good space for us. But if you look at, again, slide 3, just to take on that, industrials, transportation, healthcare, business and IT services, consumer and retail, and technology are some of the industries where we shine, I'll say. I have a manufacturing background. I have financial services. I have a couple of different industries, and you've got gentlemen who focus on staffing, healthcare, et cetera. So again, from a size standpoint, business owner needs $1 million. I'm probably not going to be able to help them. So ours are EBITDA firms of 5 million or more in different industries. Hope that's helpful.
Thank you.
Yeah.
Very helpful.
And then Dan, back to your question, what is it that the business owner needs? I'm kind of spinning through my deck a little bit. If you were to pop to slide 11, what I would tell business owners is you have a business to run. Don't take your eye off the ball, but do seek out some advice and assistance. Guidance is maybe a better word. And if you can do that a year or 2 years before you get ready to sell the business or thinking about selling the business, start working on things like client analysis. Think about, and this is on slide 11, sorry. revenue trends, trends in EBITDA, profitability, industry concentration. What do you have for a strong management team? What kind of financial reporting do you have? Are your financials audited? That's huge.
Mm-hmm.
And all of these things are not things that you might think about every day because you're busy running a business. You got the company truck on or your truck is on the company dime. All those things are wonderful, but you have to think through where's the value. And that's a lot of the work that we do, is helping them understand the value and understand what that translates into dollars when somebody takes a look at either funding you or in acquisition. It's interesting. I was literally on a call this morning looking at a business for a client of mine, and there was something that just is horrible for me, which is client concentration. 70% of their revenue for this firm we looked at comes from one client. You never want to have that. If you're over 20%, you have to start questioning it. Yeah. So again, business owners thinking, man, this is great. I got a huge client that's going gangbusters, and they are growing very, very rapidly. Horrible for acquisition. And I'm sure we won't pursue that just because of the client concentration. So it's a lot of different factors. It's never one thing, right? But at the same time, you want to look at what that business might mean to an outsider. I had a meeting one time with a business owner, and he was like, I shared with him what I thought the valuation of the business was. And he said, oh, it's worth a lot more than that. I said, okay, come over here and sit on my side of the table and tell me what you'd pay for your business. Oh, well, there's a couple of issues. Yep, there's a couple of issues. So, and I wasn't trying to be cute. I was just trying to help him understand, right? So you have to look at the perspective of a potential funder or buyer to see what the value of that business is.
Well, and I've had discussions with people about buying their business and when I was working for that business. And that was always one of the things that I put forward was, look, this business is worth more to me because I'm in this business. I have these relationships that you have.
Yep.
And many owners don't really see that they're essentially the key person, right? That once they go, unless you are getting into that as a key person like that, whether you're the CFO or the COO or the primary salesperson, just a person walking in and taking the keys from you doesn't have the same advantages that a buyer who might be well connected within that firm might be.
Yeah, no, I'll phrase it slightly differently, Danforth, and that is sometimes that business owner is the business.
Yep.
And that's difficult for a buyer. I actually looked at a business once, and the dad was the business, had been there 43 years. His wife was in sales. His daughter ran the operations. His son washed the company trucks. There's not a business there. So you do have to be a little bit careful, because once dad sells the business and the whole family goes away, there's no business there.
Right.
So one of the things I was hoping to talk about today too, I hope it's all right, is, what are business owners thinking? What are business owners' challenges? And one of the things that I often have a conversation with business owner about, I call it the 3 C's. And the 3 C's really are about capital, control, and continuity. And if you think about it, capital comes in a lot of different flavors. Capital could be they've just decided they want to go to Naples, Florida and buy a $2 million house. So they need personal liquidity. Excellent. They need growth capital because they have an opportunity to buy a competitor out for $20 million. Wonderful. And frankly, they're a little frustrated with their banking relationship, not to pick on banks. But they've got a $10 million working capital loan out there, and we can bundle all that and put it together and really go for funding for recapitalizing that business to try and meet all those needs. I know last time we spoke, we had a little conversation Philip, you asked, what's the most common need for capital? And the answer is, I don't know, because it really depends on the goals of that business owner.
Mm-hmm.
If he's looking for personal liquidity, wants to take chips off the table, wonderful. Let's start there. You want to make an acquisition, you want to transition to the kids, it's really driven by that. Which leads me kind of to number two, which is control. When I start a conversation with a business owner and he says, I need $30 million, I say, okay, do you have to retain 100% control of your business? Absolutely. Okay, that's fine. Let's take a look at bank funding and let's take a look at non-bank funding. I had an instance where a trucking firm had 3 commercial banks, 11 leasing companies. I referenced this last time. And we were able to bundle all that together and give him one banking relationship with 3 times the leverage, 3 times the liquidity or revolver value than he had. And he had room to grow without having to, quote, reapply for another loan. That was an incredible change for him from a cash flow standpoint. That was his problem. He was running up against some loan deadlines. There's also non-bank funding. And non-bank funding is probably the one thing I've learned the most about in the last 5 years, which is to say you have the opportunity to get funding from other sources that are not banks. And that's probably I'm going to call it the big aha moment for business owners. Because again, business owner, you start out, you went to your community bank, maybe you got a little big, you went to a regional and a super regional, maybe you're with a national bank now, but when you think about it, there are non-bank funders out there that have opportunities to be, in some cases, more flexible because they're not regulated the way banks are. And it gives that business owner some wonderful opportunities to grow their business as well. So, but just to go back to control, if they say, well, I could be okay with less than 100% ownership, that opens up private equity. That opens up a lot of different avenues for me and gives them a chance to potentially sell part of the business now and in 5 years sell it again. And I know that sounds funny, but you really retain ownership and you get to sell it twice. Or if they say, hey, no offense, but my kids aren't that bright or aren't that interested, I want to sell the thing, that obviously that's a different conversation for me.
But that could also be a good scenario as well, knowing, look, in 5 years, it can either give them time to help build internal succession, right? Or secondly, no, that, I just need some more capital here. I want to partner up and let's grow this thing and get something bigger even in 5 years.
Yes, absolutely. And I'm going to reference back to that call I was on this morning. They had 70% client concentration, but the 2 owners did want to stay for 5 more years. So that creates some flexibility. That's kind of nice. And then the third C, just to put a bow on it, was continuity. And I always ask the question, do you have children? Do you have a management team that you want to take over the business? Or you're not concerned at all, but let's just have a conversation about continuity. So capital, control, continuity, those are kind of the 3 big buckets that I often throw out for a business owner. And go ahead.
Yeah, I was going to say, Mike, and with that, even though, let's just say first, let's say we've got, earnings of 5 million plus, but yet they have some of these other issues. Is this a fair statement? This is where they still can give you a call and use your expertise to help strengthen the business for a potential future sale down the road, et cetera, where you're teaming up with them and providing them the coaching.
I had a conversation very similar, Philip, to that the other day with the CFO of a business in Kansas City. And at the end of the conversation, I said, well, here's, I gave him dad advice. I said, you're not ready. You won't be happy with the benefit, with the net if we sell your business today. But here's what I would recommend you do over the next year is these 4 things. And frankly, in his case, they had some equipment that was available for rent or lease. And I said, why don't you figure out what your usage rate is? What's your uptime, your downtime? what's your client concentration? What are your client trends?
Right.
Tell me about long-term contracts. So your comment is, am I ready, willing, and able to give them a little guidance, quote, for free in the hope that somewhere down the road we sell the business? Yeah, absolutely. There is a little bit of an altruistic side to me too, which is I'd love to see family-owned businesses succeed, and to get the full value out of that is really important to society, is important to them, and it's important to me. Absolutely want to be involved in the sale if they decide to sell the business or recapitalize, but I'm happy to provide some guidance. And again, it's some of that directions provided on slide 11. So if they just take a look at some of the key valuation drivers,
right,
and read, I'm a big fan of reading. Read a book on business valuation. They're out there. I have a friend who's an attorney here in Omaha who's written a book. It's called Fourth Quarter First. Nick Neiman's the author, and it's planning for the fourth quarter. We touched on it briefly last time. When you think about it, every business will change hands at some point. Mm-hmm. You can either sell it, you can gift it, you can move it down the line to the management team, but you, as a 95-year-old business owner, there's an end in sight.
Yeah, plan with the end in mind, right? And do the backwards planning. I like that.
Yep. One other topic that I think is important for business owners is to understand potential types of buyers. If you think about it, many business owners, not all, but many started because they either needed a job, they liked the industry, they followed pursued a path of something that they enjoyed, and now they own a business. And again, they don't spend all day doing this, and I do. What are my kinds of potential buyers? And I would suggest you've got at least 3, probably 4. Strategic buyer. And a strategic buyer could be a competitor, but it doesn't have to be. We sold a business once. It was in roofing supply, and it happened to be here in the Midwest. And a $2 billion company bought it because they had distribution that looked like a big donut, and there was a hole in the middle. And guess where we were? And so we were able to help them, a strategic buyer, not really a competitor, but strategic because of geography. A lot of strategic buyers are looking for additional product lines. They're looking for a management team. There's lots of different kinds of strategics, so they don't have to be a competitor. One of the second main kinds of buyers really is private equity. And again, private equity will bring in capital, experience, connections. They'll help grow it. And they're motivated for a lot of different ways or reasons. And I touched on it briefly a minute ago. You could sell to your management team, your kids, your best friend who partnered with you 30 years ago, whatever. We also have a surge, if you will, in family offices. I don't know if you guys, I think you have had some experience with family offices, but somebody who sold their business for $300-400 million or inherited a lot of wealth from their ancestors will set up family offices. And probably 10 years ago, they weren't buying a lot of businesses. They were investing in real estate, investing in a lot of other things. But now, frankly, a lot of family offices are competing with private equity firms for businesses, and their time horizon is 10 years to infinity. They may or may not have an interest in never selling that business, whereas private equities publicly stated 5 to 7 years, we're going to sell the business. So family office is another place that they can go with that business.
Well, and that's interesting. I had a acquaintance who had gotten a proposition from a family office that in some of those, to make the point of, sometimes it's geographic, sometimes you have a product line. This was an environmental focus. This family office wanted to champion businesses that work in the environmental space, and this company had elements of that, and so could be something along those lines as well. That's not a necessarily a strict business reason. Whatever that family office might be into, for whatever reasons, could be driving their interest in what you're doing.
Absolutely. And I could extend that example. It could be that you've come up with some kind of quote plastic that's biodegradable in the ocean, and they happen to be huge fans of sea turtles. And so, again, a little bit extreme, but that's
Right.
an example. And by the way, just again to reference the slide deck, slide 10 talks about the different kinds of buyers. So if anybody wanted to research pros and cons, roles, and the definition of some of those different kinds of buyers, it's on slide 10. Yeah, one of the things that we also chatted about is some of the challenges that business owners face. Maybe I'll segue over there. And, we do talk to business owners, quote, every day. And sometimes the bigger issue is between the ears instead of the pocketbook, because it's a struggle. And I think, Philip, I know I've used this phrase with you, but if a business owner is ready to sell, in some ways, it's like putting one of their kids up for adoption.
Mm-hmm.
For a lot of business owners, they've spent more time there than they did at home. No offense to business owners, but it's demanding and grueling. So they have to come to grips with their age. They're going to have to think about, what do I do when I leave? I remember talking, he's long dead and gone, so I hope he doesn't mind me referencing. But when I was a kid, I lived in Sioux City, and Bob Peterson was starting a little company called Iowa Beef Packers. And I'm going to guess you guys have both heard of Iowa Beef Packers, and it
Yes.
became wildly successful. And I had an opportunity to visit Bob once at his lake house in Okoboji in Iowa, which is, again, regionally, everybody knows about Okoboji. And Bob only works 6.5 days a week. And I said, Bob, what are you going to do when you retire? And he said, Mike, I don't have any hobbies. And he didn't retire. He literally died at his desk. So, it's hard. What's your new identity? What's your focus? My kids will never be able to do as well as I did. That's what they always think, right? So it's really hard. And I guess my point bringing it up is to let any business owners who might be listening or thinking about selling know that they're not alone, that they're not unique, that these are feelings and thoughts that every business owner has when they're going through the process. And we're very aware of that. We'll help them work through some of that. I am not into psychology, but I am aware of the fact that this is a challenge for business owners.
Oh, isn't it though? That game is, as you rightfully said, played 6 inches between the ears, and it's a lot of these emotional biases, from, many of them, these business owners are also have that overconfidence bias, over optimism bias. Like you said, no one can do it better than me, but they need to have truth tellers come in and help them come to clarity, I guess I'll say, in defining what the current reality is.
Yeah, clarity, but also the conclusion, the comfort. You didn't reference it.
We're going on to another 3 C's there, Mike. One more and you have it.
Well, I was going to jump back to slide 4 because our purpose, core values, and our difference is on slide 4, and it's we're focused. Our purpose really is on prosperity, and it's for our people, for our employees, and some people, we challenged each other on that when we first wrote it. But the second's for our clients, and our third's our community. And we think if our employees are happy and well cared for, that they will treat our clients the best possible way that they can. And then we in turn focus on the community. But under core values, it's honesty and integrity always. I referenced a little bit ago dad advice. We give a lot of dad advice. You're not ready to sell. This isn't a good move for you. That's a bad arrangement. I have turned businesses down. Everybody in our firm has turned businesses down and said, no, we're just not going to add enough value. So that's very, very important to us, the integrity and the impact that we can have on that business and on the community as a result.
Well, and that's, to be fair, watching business owners progress through their life cycle, you start out many times as an entrepreneur. Mm-hmm. And we talk about it all the time on the podcast, how the transition to being a manager of a business from being an entrepreneur, those are not the same skill sets. And so those that do that successfully, I have to end up in the area of success that you're talking about, right? Like you can't just continue to be a pour it in the top entrepreneur. I mean, I suppose there are a few out there, but most people that end up in the, 50 million in revenue range have figured out how to become a manager of a business. And now they're transitioning into yet a third thing at the end of their career, which is a totally different skill set of how do I prepare this business for sale, which isn't, again, the same set of skills.
No. And again, fully respect the business owner who's taken a business to 50 or $100 million, because that is management, but it's also leadership. And I know you guys spend a lot of time on leadership. I once had a mentor of mine in Ameritrade. You guys know me, and I have a bit of a sense of humor. Sometimes it's a quick wit, and I tell a lot of corny jokes. But his comment to me was, keep your sense of humor. People really are attracted to leaders who can have fun. And so, as you guys work with people, and leadership's important to make sure that, the employees feel appreciated. They feel recognized, that they have a little bit of fun and continue to grow the business. I respect business owners that have been able to grow a business that big. Now, having said that, so what they're really, really good at is that business and leadership and management of that firm. We're the ones who come in as the experts and the specialists, and we will give them advice that's good or bad. Not bad advice, but we'll tell them the good and the bad about their business, which is a challenge sometimes, because you occasionally have to tell somebody their kid's not very good looking. But that's, it's kind of what we do. Here's how you can make your kid grow up and be a little better looking. So, but it's a really interesting, fun, a lot of work, because we're going to work with that business owner to say, here's the best format for your financials. And we do a lot of the heavy lifting. The CFO plays a critical role in the process because we ask for a lot of financials. At the end of the day, we put together a 60 or 80 page presentation for, quote, the street. We call it the street. And we go out and search and find the best potential funder or buyer. We create something called competitive tension. And so a business owner can rest assured we will maximize the value of that business and come up with the best arrangement by creating tension amongst potential buyers. I have a business I've been speaking with for some time in Kansas City. I can't share the industry or anything, but the dad said to me the other day, we've had 2 or 3 people approach us. Why shouldn't we just sell to them? And I said, maybe you dated one girl in high school, but maybe you dated more than a couple. And then if you were competing for a girl, that kind of piqued your interest. Well, I'm going to go out and find a whole bunch of people who are interested in your business. We had one where we had 13 term sheets. And if you can create that kind of competitive tension, you'll maximize the value. We were able to take one business from a 6 times EBITDA multiple offer to 9.3 before we were done. And so we've got a 50% value increase.
Demonstrating value there.
Yeah. And we, Monday morning call this morning, we found out that offers that came in on a new firm that we have engaged to sell between 6 times and 11 times. Isn't that incredible?
That is.
So if you're not shopping the market, if you're not forcing competitive tension, and you got that offer for 6 times or 7 times, and you thought, man, that's it. I'm done. That's a great offer. You would have missed out on 10 or 11. 11 times EBITDA is a much bigger number when you're at 12 million.
7.
Yeah. If you're at 12 million in EBITDA and you get an 11 offer, that's a little different than 6.
Well, and it just always strikes me that just as in financial planning, these conversations all have echoes in other areas, right? Why don't I sell my house myself? Well, you could do it. You can go out there and learn, and you can learn the market, and then it's going to be a whole bunch of work, and then you may not get as good of a price still. it's just all the same things,
Yeah,
right? Sure, you
yeah.
could go do it yourself. You're going to have to put time in. You're going to have to learn, and you're not dumb, so you could probably figure it out. But all of those things still have to line up, and then you still may not even get the best price because you don't have the relationships.
There is a chance I could do my taxes online. And there's a pretty good chance that I don't understand the tax code, but I hired a CPA to do my taxes because I want a specialist.
I'm not going to throw Philip under the bus on that one.
I'm right with Mike on that.
I'm not doing my taxes. And
no,
again, just to reference the last conversation, I had a knee replaced a year ago, March. I didn't have my family practice doctor do it. I went to the specialist. So, there's a lot of heavy lifting. Projects will take 4 to 6 months. In fact, 6 months or longer to actually package, present, market, evaluate offers, go through management meetings, get to a final offer, go through the contract. It's a 6-month process. So one of you asked earlier, if somebody's not ready to sell today, when do they start? Yesterday.
Yes.
Because it's 6 months. Once I get engaged, I can kind of plan on 6 months of work. So it's not overnight, and don't, if you wanted to sell in 2 weeks, I'm probably not going to be able to help you.
Well, I like also your analogy with your knee, and I've had a lot of our people in our audience know cancer. When you got 3 choices really with cancer. You can heat it up, you can cut it out, or give it chemicals. I didn't, when I was searching for the right doc, it wasn't my GP. GP certainly highlighted you probably need to talk to a specialist from what I'm seeing here with the results. But then I looked for just that results. And I loved how I wasn't looking for bedside manners. I was looking for actual results. So I loved how you started this whole thing off here today. Look, here's our company. We got 4 offices. I got a satellite in Chicago. We did we've done 96 of these transactions of selling businesses worth $36 billion. Those are not small numbers. That demonstrates to me mastery of your subject matter here. So,
well, thank you. It's very impressive when you sit down with our core team who really run the process, and this is what they do all day, every day. Our analysts are ex-CPAs, one in international tax, KPMG level people. Mm-hmm. So this is a very specialized practice that we have.
Right. So, Mike, is there anything else you would like to say, or is there a question, maybe we missed that you think should be addressed here for our audience of business owners to help them make better decisions? And that's what it's all about, is making good decisions.
Yeah, I would suggest that again, business owner seek outside advice. It could be that one of your golfing buddies is an investment banker. Talk to him, get the conversation started, plan for it, maximize the value. That's really what we help do, is work with business owners to monetize their life's work. And you don't want to miss the opportunity. Again, the market goes up, the market goes down. If you're in a really good place, now might be a good time to sell. Taxes may be on sale this year. We don't know. But I think, the item or the thought I would leave with a business owner is reach out, get some advice, even if you're just casually thinking about it, but know what your business is worth. It's generally the largest single asset you have. You should probably get a sense for what that asset's worth.
Is there, and on that, Mike, is it, I like creating that competitive tension example you use, but is there a rule of thumb? And I also joke, you look at my thumb, let me see your thumbs. There you go. Rules of thumbs is different for everyone. But as a multiplier goes, in selling a business? Is there a rule of thumb?
Boy, that's like, is every snowflake the same when it's all piled up? I
Nice,
think,
nice, nice. That's very visual. With 6 inches of new snow yesterday,
yeah, yeah. Is there a rule of thumb? A $5 million EBITDA company in industry X is worth 6 times and industry Y is worth 10. So, that's the hard part. Is the business 5 million today and yesterday it was 10 million? Or is 5 3 times what it was 2 years ago? So, I don't mean to allude, but, a lot of businesses these days are trading 6 to 8, 6 to 9, somewhere in that range. It's come back. What I would also add, I had a business owner pose this question. He said, well, who would be interested in my business? And I said, well, I'll tell you what, there is currently in the coffers of private equity firms $1.2 trillion uninvested. So when it comes to debt capital, which I touched upon very briefly as a source of capital, it's straight debt. You give up no ownership, or you're interested in 2 bites of the apple and a private equity partial sale makes sense to you. There's over $1 trillion sitting in somebody's checkbook just waiting to be invested.
Mm-hmm.
And it's funny. One more, sorry, Danforth, one quick story. So we had a business once for sale that was going to take a $30 to $40 million check. And I called a guy who knew a guy who sent me to another guy, right? I mean, that's kind of what I do all day is I call and say, hey, do you know anybody that, et cetera. I got to a guy in California, and after a quick visit with him, private equity guy, he said, Mike, you seem like a really nice guy, but don't call me if the check is less than $100 million. Oh, okay. I mean, he wasn't willing to even focus on a project that required a check less than $100 million. I got to tell you, that blows my mind. I mean, I grew up in towns like Yankton, South Dakota, and somebody talking about $100 million checks, that doesn't make any sense to me. But that's the kind of money that's out there. So
Mm-hmm.
Is there a question that maybe you didn't ask? It's how much money's out there for businesses? Tons.
Right.
And the thing that I was going to point out is I've been hearing that interest rates are going to go up since the year I started financial advising, which was 2001. So I'll believe it when I see it.
Yeah.
Like at this point that there's not a lot of places for it to go, right? Like at this point,
interest rates have to go up, right? Unless you're in Japan, it can't go below 0.
Right.
Right.
So, yeah, I think they do have to go. The 10-year, I saw a note this morning, don't quote me on this, I apologize, 10-year bank treasuries, 10-year bank notes, the interest rates gapping now between that and the 1 year, which would suggest interest rates will follow. So,
Mm-hmm.
But that's happened about 25 times in the last 2 decades. And then not. So I'm saying I agree. It's got to happen at some point, but it's always next year. Like it's going to happen next year. Okay.
I'm not a prognosticator, but what I can tell you is in 1981, when I bought my first house, I assumed a 13.5% home mortgage, and the new mortgages were going for 16%. So I got lucky. Yep.
Money markets were 17, 18%.
Oh, yeah.
Prime rate, 21%. But I'm going to go back before we sign off here.
Yeah.
And again, what you just stated, if I was a listener out there and I'm thinking, you know what, I want some money off the table. I do think, yes, taxes, and again, there's no guarantees here, but taxes could be going up. You're certainly seeing conversations on that right now. And I just do the math and I apply some of that right now. But yet I don't want to give everything up. So I like your scenario. You know what? I'm willing to give up a certain percentages, bring in some extra capital, bring in another partner, because I can't take this business. I've taken it to as far as I can. The same sort of thinking isn't going to get me from 50 million to 150 million. And I need some different brain trust, and not just brain trust, real true competent skills where someone has the experience of taking a business from 50 to 150 million in 5 years.
Yep. And what I would add, I guess, is that options are good. Not currency options, not stock options, just options as a business owner. If I now, after listening to this, podcast understand that there is debt capital out there where I can get additional capital that doesn't require me to give up ownership, that's an option. You probably didn't know about that. I could sell part of my business and keep it for another 5 years. That's a new option. I didn't know that. So again, one of my goals is to help business owners who have been wildly successful running their business understand that they do have options out there. It's not a black and white kind of decision on what do I do with my business. I have to sell it. I shared a story, and I'll make this quick. Shared a story with you last time. There was a business owner that went to his financial advisor and said, "Hey, I have to sell my business." Financial advisor said, "Why?" He said, "Well, the bank won't loan me any more money." No offense to the bank. It was a really asset light business. And, I just don't have much of a plan. So we worked with them. We sourced $45 million. We helped him buy out the minority partners. We worked with the lawyer, the CPA, the financial advisor to structure the business to go to the girls should he pass away. And it in many ways changed his life, because it certainly did for the family, because now he had access to capital. It was not private equity, and he was able to he had freedom to do some more things, and again, set up a business for his girls to inherit it should he pass. And, it's a funny thing. I joke with my mom that she'd make a great ostrich, because when she doesn't want to deal with something, she just puts her head in the sand. And I read a book one time. I was thinking about this the other day. You ever read that book, Eat That Frog by Brian Tracy?
Oh,
yeah. Eat That Frog by Brian Tracy. And it's more to do with, accomplishing or getting over with the one thing you really don't want to do, right? Because you're putting it off and putting it off. But if you eat a frog first thing in the morning, the rest of your day is going to be easy, right? So just face that fear, face that issue, and get through it. And the rest of your day is going to be great. So for business owners, your business is going to sell someday, or you have to make a decision someday. Seek advice. I'll present some options to you, give some ideas. Happy to help.
Beautiful.
Well, and I think there's a great way to kind of wrap all of this up and put a bow on it from tying back in the financial advisor side of things. My biggest client when I was a financial advisor, as I mentioned before, was a business bank. He was a $150 million commercial real estate investor. His brother had about $50 million business. And my biggest sale to them was life insurance on an estate plan that they were doing. But I remember him saying, he was in his mid 40s at the time. I remember him saying to me, "I don't have a lot of money that's not in real estate because it's what I understand. I don't really understand the stock market, but one day you can help me sell this business and then help me invest it. What my proceeds?" And I remember thinking, I don't have any idea how to do that. Luckily, I have 20 years to figure it out.
Yep.
But many financial advisors do the same thing. They stick their head in the sand and just say, I don't want to mess that up. I don't want to mess up the fact that I'm getting my 1% on the $2 million portfolio that I have, which is for them. They realize to some extent that they're sitting on this gold mine, but they don't really understand how to access it. And having a resource like you is a huge thing to have in order to start tapping that. And what I would suggest with any financial advisors out there is, pick a handful of folks, just like you do with your wholesalers. Go through your book and pick out a couple of people you think might be good prospects and start trying to have these conversations and start trying to work with Mike on getting some of these things going, and you will learn along the way the things that you need to do. So one last thing before we let you go, Mike, we always ask each of our guests this question. What one pearl of wisdom that you have gotten from be it a friend or a mentor over the years has been especially meaningful to you?
When I was with Ameritrade, I had a boss and a mentor who he made the comment about the sense of humor, which worked out really well for me. But I had a chance to interact with him. I haven't worked with him for 20 something years, but we talked a little bit about that. And he said, really, at the end of the day, there's three things. So, Philip, I'm back to my three things, right? I always have three things, right?
It's a shock.
It's a shock, but threes are easy for me to understand. I can remember usually three things at a time. But he said, focus on God, focus on gratitude, and focus on giving.
Three G's.
Three G's. So it's. I know there's 5G.
Like
there's 5G networks out there now, but I got 3Gs. So
powerful 3Gs. Your first one you can't beat.
God, gratitude, and giving. Those are your three Gs. Those are your three Gs.
Well, when you first said I got these three C's, and you shake my family tree, a bunch of CIA's fall out, Catholic Irish alcoholics. I thought you were going to say, didn't cause it, can't cure it, can't control it. and all those who are friends of Bill W. will know exactly what I'm talking about on the airwaves here. So, always a pleasure, Mike. And thank you so much.
Yeah.
And thanks for adding value to these communities, because I think I just read, and I could have it wrong, 70 or 90% of all the businesses in the U.S. are family owned. And I think we lose perspective of that.
They are family owned, and they are owned by quality people who aren't quite sure how to get out.
Yes.
And that maybe is the way to leave it or look at it. Is this has been a great business. I love it. I've had a lot of fun. It's paid for my kids' college, etc. I don't know how to get out. That's where we come in.
Yep.
Awesome. Thanks so much, Mike, for joining us for both weeks. We really appreciate it.
Thanks, guys.
And that is going to wrap up our episode for this week. Again, if you would like to get in touch with Mike, you can reach him via email at manderson@bridgepointib.com, or you can find his website at bridgepointib.com. Otherwise, you can reach him via cell phone, 402-290-6611. Again, 402-290-6611. And once again, if you do reach out to him directly, please let him know that you heard about him on the Valuability Podcast. If you have topics for us to cover or questions for us, you can reach out to us at info@value-ability.com. Again, that's info@value-ability.com, or you can find our social media links. Twitter, Instagram, and Facebook links are all at value-ability.com under the Contact Us tab. You can find us wherever you find your podcasts, Apple Podcasts, Spotify, Amazon Music, or we have a YouTube channel. Search Value-Ability to find us there. Or you can find us on our episode player, value-ability.com, under the Episodes tab. Wherever you find us, please like, review, subscribe, and share. And I just want to give a big thanks to all of our listeners that have listened to our pleas for subscriptions. We increased our subscriptions by about 60% in the last 2 weeks. So huge thanks to all of you for that. Next episode 54, we are going back. For those who have been following along with us, we started a 3-pack of values-based episodes: patience, discipline, and humility. We did patience and discipline, and then we got into, over the last month, our 2-part episodes with Todd Money and Mike Anderson. So we are coming back to finish up with humility. So episode 54, the value of humility. We will be touching on that. Going forward, Philip found Ben Franklin's list of values. There are a dozen of those. I just want to review those really quickly: temperance, silence, order, resolution, frugality, industry, sincerity, justice, moderation, cleanliness, tranquility, and humility, which we are going to be doing next week. So we are essentially now starting off with the 12 of Ben Franklin's values. So let us know, after humility, what else should we tackle off of that list? Reach out to us via our email or social media links, as I just mentioned, and we will follow on to what you guys suggest for us. As always, thank you for listening. Be sure to join us next week. And remember that financial success comes from creating a plan on the foundation of your values, and building your ability will get you there. This is a podcast collaboration, not a peer-reviewed journal or a sponsored publication. We make no representations as to accuracy, completeness, correctness, suitability, or validity of any information in this podcast, and will not be liable for any errors, omissions, or delays in this information, or any losses, injuries, or damages arising from its display or use. All information is provided on an as-is basis. It is the listener's responsibility to verify their own facts. You should be aware of the real risk of loss in following any strategy or investment discussed on this podcast. Strategies or investments discussed may fluctuate in price or value. Investors may get back less than invested. Investments or strategies mentioned on this podcast may not be suitable for you. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as recommendations appropriate for you. You must make an independent decision regarding investments or strategies mentioned on this podcast. Before acting on information on this podcast, you should consider whether it is suitable for your particular circumstances, and strongly consider seeking advice from your own financial or investment advisor. The views and opinions expressed on this podcast are those of the authors and do not necessarily reflect the official policy or position of any other agency, organization, employer, or company. Assumptions are not reflective of the position of any entity other than the authors, and since we are critically thinking human beings, these views are always subject to change, revision, and rethinking at any time. Please do not hold us to them in perpetuity.